Hi, I'm Serina Jackson, and today we're going to be learning debits and credits. We're going to be working with 5 simple accounts. We're going to be working with cash, car, owner's investment, bank loan, and equipment. If it's an asset, then debit is plus and credit is minus. If it's a liabilities and equity, it's debit for minus and plus for credit. Every transaction changes 2 accounts. One account has to be debit and the other account is credit. Total debits and credits must be equal after every single transaction. Three-step plan. 1. Which 2 accounts change? 2. Is it plus or minus? 3. Look at the chart. Decide which ones are debit and which ones are credit. Transaction A. If you paid $3,000 for a new car, the accounts that will change are cash and car. Cash will be minus because you're giving away cash, and car will be plus because you're getting another car. So they're both assets, so car would be debit and cash will be credit. Transaction B. Owner invested $5,000 of equipment from his home into his business. So equipment will change and owner's investment. So the owner invested more into the job, so it's plus, and equipment is plus because the job's getting more. Equipment is an asset and it's plus, so it has to be debit, and owner's investment is an equity, so it has to be credit. Transaction C. Paid $2,000 to decrease the bank loan. So cash will change and bank loan will change. They're both minus because cash, you have less cash, but you decrease the bank loan too. Cash is an asset, and if it's minus, it has to be credit. Bank loan is a liability, so it has to be minus and it's credit. It's debit. Transaction D. Sold $4,000 of equipment for cash. Cash will go up and equipment will also change. So cash, you're getting more cash and your equipment is minus. Cash is an asset, so it has to be debit if it's plus. Equipment is also an asset, and if it's minus, it has to be a credit. Transaction E. Owner took home a car that cost $1,000. It's owner's investment and car. The company has less cars, so it's minus, and owner's investment is also minus. So car is an asset, so and it's minus, so it has to be on the credit side. Owner's investment is an equity, so it has to be on the debit side if it's a minus. Transaction F. Borrowed $7,000 more from the bank. Bank loan will go up and cash will go up because you have more of a bank loan because you have more, so eventually you have to pay back the money, and cash goes up because you have more cash. Cash is an asset and it's plus, so it has to be a debit. Bank loan is also a plus and it's a liability, so it has to be credit. Section G. Borrowed $6,000 more from the bank to buy a new car. Car and bank loan will change because you have more of a bank loan because you borrowed more, so you had to pay back the bank even more. And car is also plus because you have another car. Car is an asset and it's plus, so it has to be debit. Bank loan is a liability, so if it's plus, it has to be credit.
By the way, folks, Serina really does know her debits and credits. And if you would like to see the footage of Serina learning her debits and credits, you can vote yes in the survey that's coming at the end of the video. You could also leave a comment or send me a message on this very website. And by the way, please mention if you think this is a good intro to the videos. Hi, I'm Uncle Mark.
And hi, I'm Serina May Jackson.
Okay, and this is the Debits and Credits Show. Learn your debits and your credits, learn your debits and your credits, learn your debits and your credits today. Learn your debits and your credits, learn your debits and your credits, learn your debits and your credits today.